This is your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, May 13th, 2015. Euro dollar. So the euro doesn't look like it's ready to give up its correction just yet, with the market now poised for fresh upside towards its measured move objective that coincides with the February peak at 1535. The other week, the market had broken above a neckline of a double bottom and triggered that double bottom, which now opens the door for that measured move towards 1535. At this point, only a break back below the neckline that comes in at 1050 would compromise the current recovery outlook. Sterling dollar. So cable has done a good job of extending gains to fresh 2015 highs, with the market most recently taking out resistance at 157. At this point, there's a measured move upside extension seen towards the 5900 area before the market considers the possibility of broader trend resumption to the downside. Dollar yen. Dollar yen remains locked within a consolidation, though the market continues to show a contraction in volatility, which does warn of a break over the near term. Given the broader uptrend, the market is favored to break above the recent 122.03 high, that 7-year peak that we saw earlier this year, and towards the 125 to 130 area further up. Any setback should continue to be very well supported ahead of 118, while only back below 115.55 would compromise the bullish structure. Euro Swiss. So Euro Swiss is doing a good job of recovering after basing out at 102.35, and the market is now looking to put in a higher low by recent lows that we saw around 103 in favor of the next upside extension beyond 105.25 and towards 108.15 further up. Really, only back below the recent lows that we saw at 103 would compromise the recovery outlook. Aussie Dollar. Aussie is doing a good job of consolidating after breaking down over the past several months, though the market should find good resistance within this downtrend above 80 by the recent highs at 80.75. Really, at this point, only a break back above 80.75 would compromise the current bearish outlook and delay the prospect for a more significant bearish decline back below 75.60. Dollar CAD. So dollar CAD has recently broken down below 23.50, a level that had been supporting the market for much of the trade from January through April. The break below 23.50 was a break of a range that had been seen of 485 points, and this projects a fresh downside extension towards current levels that we saw in the 119s. The measured move objective to the downside does come in exactly at 1865, and really at this point only a break and close back below 1865 would compromise the broader bullish outlook for dollar CAD. Over the coming sessions, look for the market to carve out a higher low somewhere in this area ahead of a bullish resumption back towards the recent highs that we saw this year at 28.35 and towards the 2009 peak at 130.65 further up. Kiwi dollar. So Kiwi is doing a good job of rolling back over, with the market recently putting in what should be a lower top in the 77.44 area ahead of the next major downside extension below 71.76 and towards 65 further down. At this point, any rally should continue to be very well capped, with only a break back above 77.44 to compromise the bearish outlook. SPX 500. So the S&P 500 continues to consolidate just off recent record highs at 21.26, and the market's now trying to figure out whether it wants to continue to consolidate below the recent record high in favor or ahead of the next big push, or is in the process of carving a more meaningful longer-term top. If we are going to see a more meaningful longer-term top, the market will need to break down lower below critical support, which now comes in at 20.40. Gold. So gold is in the process of consolidating recent trade, with the market now largely locked between 1170 to the downside and 1225 above. At this point, we're going to need to see a break on either end for clear directional bias, though there is the possibility that the market is still trying to carve a more meaningful longer-term base off the 2014 low at 1131 ahead of the next major upside extension. So if we do see a break back above 1225, this will likely open the door for a move towards 1300 and will strengthen this outlook for a more longer-term base. However, a break and close back below 1170 would compromise this outlook and put the pressure back on the downside towards that 2014 low. That's all for now.